Just call it down. Okay, keep coming in. Cool. All right, stop me at any time if you have questions. This is my pre-market high. PMH. You will hear me say that, no, pre-market high, pre-market low. Okay. So this is what I have. This is all I know before the market opened, 30 minutes. So before I do that, I know that if the market break out above his pre-market high, I would take call. And if it goes underneath to my pre-market low, I will short the market, meaning I would take puts. Now, if I was to take puts, I'm going to look for aim for yesterday low, which is here. But let's say yesterday low was right here by, let's say, only $1 drop. I would not short the market. I would wait for the dips. I would wait for the market to, if it's yesterday low was only like right here at 682 or 683, the drop is very small. I would rather wait, for the bounce. What I mean by that, I'm going to show you real quick. So this is what I know, because that's a big gap. So there's a big range for the puts, to a big range for the top if it break out. Now, sometime I would share the screen. It's like, hey, there's a lot of puts, or there's where's the way we're sitting. Early in the morning, I would show you guys, hey, today I showed you there was a lot of puts. Let me pull up this screenshot. These are usually the money makers. If you look up BlackRock, Vanguard, they own, I would say, almost 80% of the market of SPY. I could be wrong, but I think I will find out the exact data and I'll share it with everyone. So this is what I share with you guys, like on yesterday. So you knew that a lot of whales are sitting in puts. They bought this up 3-1. So that's like easy. Okay, you know that, okay, if we go down and need 683.76, I'm gonna puts in the, where do I aim for my puts? 6, 7, 9, 10 was yesterday low. I mean, anything beyond that is a bonus. So let's say the market open and I see there is a, right here, do you see this little, touch this little thing? Imagine this is like a double top on SPY. SPY does not like to be double top, triple top. It's always reject. What do I mean by that? Remember that 689 right here? You go back, all the way back to October. You see how it's right here, double top? SPY rejected hard. Like it's just, like I said, SPY does not like to be double top. Any stock markets, any options without volume, it will die. Like any stocks, double top, triple top, it does not like to be, it's like a roller coaster. It does not like to be double top. So the market open, correct? You see it's little thing right here. I know this is my, like if it touch above, it break out, I'll take call. Like it's right at pre-market high too. And I know there's a lot of puts, meaning I'm gonna think this is gonna be a put day. I know this is already at double top. Where do I take my puts? I would either grab underneath when it drop underneath here, and there's a big drop from 683 to 679. That's a $4 drop on SPY. So no one's going to be able to catch the 1 minute indicator. This is always, when the market open on the 1 minute, it's always a gamble, 50-50. Unless you have some inside information, you know what you are doing. You can wait for 5 minutes or 15 minutes, or you wait for 5 minutes when the markets drop underneath here, the pre-market low. You go short, and what is it short to? 679 to yesterday low. Yesterday low is where, look at where SPY bounce. Bounce here. and it bounced somewhere close, several times again. Like it just keep on bouncing, even not using the EMA, the VWAP, or any of that. Now, if you want to turn on the VWAP, the 200s and VWAP is always going to be a massive level of rejections on SPY. The 200 is always, I'm just going to erase this and just, it's a massive rejection level on SPY. Look, and also using the VWAP is also a second indicator. Above VWAP, it's call. Below VWAP is puts. Above VWAP, it's call. That's usually what you want to do. Is like, all right, if I'm going to see the market, it's right here for once. And remember, you have at least 3 try before SPY will reverse, or any stocks will reverse and go back up again. So don't short the market forever. So it's, here's reject once, twice, 3 times, almost 4 times again. 5th time, it's keep, but eventually it's going to probably sometime it's going to break out. But you are not going to get much before it sit at 679 yesterday low. So this was on a Monday. So in the grand scheme of things, where would you grab calls versus where would you grab puts? Not using the not using the RSI, or not using TTF, all that. Just playing by level to level, you take puts near VWAP or the 200 EMA rejections. VWAP is always the main major line. When the market is bad, look for VWAP rejections. That's using this. You take it down. Look at 679 yesterday low. That 679 is Friday low, and look where it bounced off, like twice, at least 3 times for you to play it. So you could have scalp multiple times. You could scalp, puts down here, going down from VWAP, and then taking calls up. That's the easy way. Now, let's say, okay. Now this is what I have. I'm going to delete. Okay, now Monday. Let's say Monday begin, and I have same thing. I have no data. So I'm going to delete this line really quick. I'm going to move this line to yesterday. It's just my high and my high and the low. And then I'm going to grab this as my there. I'm going to keep it there. And I know this is my low. This is my yesterday low, pre-market low. So when you have something similar to like this, again, like different, it's every day is going to be different. Not every day is going to be the same. And then yesterday high. So this is what I have on before the market opened. Like, I got tricked with this one too as well. Don't, people lose. I'm too. So, we always, if you can beat the market, you can win 4 days out, 5, you will beat the markets. You'll be that top 3%. 97% of that play the market, lose and give up, or they file bankruptcy. So if you can beat the market 4 days out, 5, you are good. Or at least you break even, or even if you are just $1 above, you are in the top 3%. 97% lose money and they give up. Some people say they've been doing this for 5-10 years, unless they've been making money constantly. But majority of the time, people lose and they give up. So this is what you have on Monday. Not Monday, Tuesday. So this is your data, and we are at pre-market low already. We are lower than yesterday. So if we were to drop, where would you aim for? Let's say, above here, you would grab call. Pre-market high. If we were to break above pre-market high, 682, I would take it. If we were to drop underneath pre-market low, I always grab puts. That's just the easy concept. So if this was to drop, where do I aim for my final, let's say, level to grab, to stop out, or where should I stop out my puts? So we already right here, there's, let's say this was Monday. You have no clue. So if he was to drop underneath 677, where would you aim on this side? Because always look to your left, and you will notice that there is a big gap right here. Depending on what app you use, I think Weibo, there is a mini gap. There's a mini gap that hasn't been filled. And TradingView, it shows that it's been filled. This one shows it's been filled. But on TradingView, on Weibo, on I don't know if it's toss showing. It's also there's a gap there as well. So you know that there is a gap in this little area that it needs to fill. So if we were to drop from 677, it will go down to 676, lower than 6775. Usually when it drop a little bit harder than that. So I would take somewhere close to this area. It doesn't have to be exact. It can be 50 cents, dollars off. But you know that there is a little gap that has not been filled. According to TradingView, it shows it has, but on other gap, it hasn't. It's gap up. On November 25th, we gap up and it never came back down. So that was Thanksgiving week. So today, I should have knew that puts was massive. So here I show that there was a lot of puts being bought up for SPX 6780 yesterday. If you look at here, that's a big, they bought this up all yesterday. I know there's a lot over here, but those have all been active. So those have been open for a while. They probably took profits, but this was brand new. They just bought this up yesterday. Okay, so SPY open. And SPY is right in the middle. I know in theory you should only go long when it break above pre-market high, or if it goes drop underneath pre-market low, you go short the market. In the first 15 minutes or first 20 minutes, it's a big boy trap. Like I took call right here, we got 20%. I didn't take profits. And then, it gave back to 60, and then it just dropped really hard, really fast. Because I should have saw this and kept to the puts. And you notice how we triple top right here. 1, 2, 3. We could not break out. Like I said, SPY does not like to be triple top, double top. It hates to be double top or triple top. Whenever you see that, you know it's going to be a puts. This is the easy strategy. And look where it dropped to that pre-market gap level, that 675 level. And look where it bounced off from. Like yes, it did go down a little bit lower than 50 cents, less than $1. But look at where it's consolidated. It never dropped underneath, because to go underneath, it needs an extra catalyst to go above. It's the same thing. If there's a good CPI, it will break trend. But until then, it will stay within trend. Meaning if it goes down, look to your left where it will go down next. You don't need to make this overcomplicated. So you can say, I'm going to grab puts, at pre-market low. And look at yesterday low. It's as support, meaning this has become a resistance. Not using VWAP, not using EMA. You're using just the simple strategy of just looking at your yesterday low. If it break above, it's a support, meaning it wants to bounce above. Remember how we saw this yesterday on Friday? It bounced off from here, right? Because it stayed above. But if it's underneath, that yesterday low will become a big resistance, meaning it does not, it will drop, it would just keep, form as a big support, big resistance to break above. Meaning if it hits yesterday low, it's gonna die. It try to break here, it dies again. It dies once, twice, almost 3 times. Like I said, after 3 times, you don't want to bet against that. Then again, but look where it's bounced off from that gap fill, zone 675, 67, close to that 675 from November 25th. Yeah, they would break above that. It, finally it broke above. That's just a grand scheme. But let's say, all right, where would I would enter? Take a note. Just deleting all this stuff for right now. I don't need all this. Also play on a bigger time frame. I used the 5 minutes, and the 1 hour. I used to use the most. Oh yeah, and then I'm gonna go back really quick to the 1. I'll show you how it's similar to that rejections. See how SPY rejected 200 EMA and the VWAP. It's act as a major resistance. If you did not know when to grab, just play off, not using the RSI, not using this yet. I'll show you this in a bit. Just grabbing puts. Call is going to be from that 675. You knew that 675 is a big, that's huge support. But if you don't know that, you can grab puts from VWAP down, going down. You take the wick, you take every single wick, and then you see how it rejected 200 and VWAP several times, like once, second, 3 times. After 3 times, usually it's you're risking it. I would always, if you take puts 3 times, is the most you do. Same with going puts or going call. I think we chase LLY 3 times. The 4th time got killed. I think I should have knew that by heart. But always the 4th time you go smaller. See how it reject once, twice, 3 times, and the 4th time it came back up and just broke out. But now you want to look at the bigger time frame, which will be 1 hour. And I'm gonna move this out now. And look for trend where the markets, where does it die? So where does it, when it touch and die? As long as there's no CPI, there's no major catalyst or FOMC, stuff like that, you will see that, hey, there's a big support. It dies for when it touch here. And then when it touch, similar to here. Oops. It's easier to see on the 5 minutes. Just look for trend line, like it's usually a parallel line. Like you don't have this data, you just know that, hey, it's gonna die. It touch here somewhere along this top line. Under 5, it touch here, or you can just draw it from here to here. You don't have to draw it from all the way from here. You can draw it from here to here. You can say when it touch here, going all the way down, just draw it in. See how it's act as a big resistance as well. It touch here on the bigger time frame, on the 1 hour time frame, it touch here and then die. Second time, same thing. Third time, before time it touch and die. That's why I said, hey, at 680, I'm gonna sell my call. I did took call like end of day today, but I saw at 680. I'm like, hey, I show everyone's like, hey, it's gonna touch this top line. It's gonna be a big resistance. It did broke out for like 50 cents, and then it died down. I used the 5 minutes because the 1 minute is a heart attack. The 1 minute I call it the heart attack, but it's the entry point for me. I use this, and I go to my EMA and I use the VWAP wherever it's touched the highest. I would grab that. But if you look at the 5 minutes, you may have to play. It's a little bit. You look for trend line. The 5 minutes. That depends on if you want to use the 5 minutes or the 10 minutes. Now that's just using, EMA, RSI. Just the basic. Now I'm showing you the RSI. Now that's just yes. Now with the RSI, I think Bowie and Ben, they have that little thing where they have that Mac. You can download it on our little strategy 202. I think they have that. It's called, or at least it's strategy 101 or strategy 10. Strategy 202. The TTF and the ORP. Copy link. Yep, here you go. And strategy 202 and the TTF ORP. That is the setting for this right here. If you want to change it. But so by it no. So you want to buy in the oversold and over territory. So you want to wait when this is being overbought and oversold. Like let's say today. So when this is at the bottom, this would be a call. Meaning RSI is at the bottom. It's being oversold. If RSI is over 770 or 80, that is overbought. So you want this to be at the bottom, meaning you want to grab call down here. When this is above, you grab puts. So you wait, you don't buy in the middle. Like right in the middle, you do not touch anything. You don't do anything at all. That is if you just want to use this strategy. So this is right here where you would buy it again, buy call right here. You see it's, let me delete this so you guys can see this really quick. See how it's at the bottom? This has been oversold, meaning there will be a bounce, quick bounce. So you would buy call right here. Buy call here. And then you wait until it has to hit the top, like way at the top here. Like close to the top as you can. So you want to grab call and then you grab puts. Ooh. This would be like second guessing, but you want it to be at the very top. And then you wait here again. The closer you can, the bottom you can't. It will be like right here. You grab call because right here is one single, and then also using the MAC because you need to look at where the MAC is located because the MAC green is when you want to buy call. You do not buy, you do not buy just because this is at the bottom. You need the MAC to be green. This is oversold. You need the MAC to be green as well to grab call. So you have to utilize both the MAC and the RSI. Because you use this, go red, at the top. Same thing. And then here, it's overbought, way overbought. And then when the MAC is reversing here, you grab puts. So you see how you utilize the MAC. When it reverse back, you grab puts. When it go back up, you grab call with the green MAC. You want the green MAC to be green, is call. When it reverse down and it's red, you grab puts. And then down here, same concept, you grab call right down here. So this is using strategy. And let's see how many times we win, because it may not work all the time. But if you can win 80% of the time, you make money. If you just size in the same every single play, I think you would get killed chasing. Right here, you would have to guess. It's like, all right, I'm going to grab puts because it's going red. I'll grab puts here. You got kill. You may have win like 5-10%. Not a big, not a guarantee, but you're all right. It's not going red, but it's went underneath. I grab puts. I got killed once, and now it's overbought, way overbought. Come back down, and I'm gonna grab puts here. All right. So let's see how many times you win using this. You win once, you make some money. Second time you win second. Third you win. Fourth you win. 5. The 6th time you lost a little bit. Hey, you win what? 1, 2, 3, 4, 5, 6. 6 out of 7. That's only using just the RSI with the MAC. But you have to watch it. Like just watching SPY, only SPY. Like that's just gonna be playing SPY constantly. And then same here at bottom, you probably grab call, you get kill. What's the question? What's the line on RSI? This default, you just go, you don't need to do anything else, special. It's just relative strength index. It's the default is 20 and 7, the higher the better. You want to grab puts, you want to grab call when it's down here, when it's above, when it touches above here, when it has to be completely here, you grab puts with the MAC crossing underneath. But if you want to use this cliff note right here, it will put all of it into one for you. The setting on indicator, view up setting on indicator. It's just my default setting. I'm not using any special high lows. It's my regular standard. I don't have to change anything of this. This my volume weighted index is just the normal. I don't want to change more than I need to. I don't want to overcomplicate. I think they mean the yellow line on the RSI. This is making sure to view up what's the line on the RSI. So it's the RSI is your overbought, oversold. That's just being above. When it go above, that's just the smooth line. That's just being. Here you go. Whoops. That's just how long you want to go down. It's 14. That's just how long it's been. It's just the 2 weeks RSI. Don't need to overcome. Don't change. You don't need to change much more than you have to. Just keep the standard MAC. Keep the standard RSI. So here, let's say on yesterday, you need the MAC to be green because MAC is not green here. So you do not grab call, but you probably grab call right here because it changed to green a little bit. So you grab call, you probably make a little bit money, and then you get, that's just in the grand scheme of things. You probably scalp quickly if you were able to scalp that 1 minute. So I don't think anybody can scalp that 1 minute. So this would be a loss. Same concept here. You went green. I'm gonna grab call right here. You make some money. It's still over, and I'm not gonna touch until it's turned right here. Touch the, and then MAC cross underneath. I'm gonna grab puts right here in this line, somewhere right here. I'm gonna grab puts. Not no, it's at the bottom, but the RSI, the MAC is still red. I'm not touching that. MAC is right here, so I'm gonna grab. It's at the bottom. This would be a non-confirmation ad because it's not at the bottom. But if you want to add here, you probably could make some quick money. And then here, that's not a, you need the MAC to be green or red. You need this to reverse completely, either at the very top, and then right here, it's not a full confirmation ad. You want it to be touched like right here, and then see the upper top with the MAC going red. You grab puts right here. But by doing this, you limit yourself to only one stock at a time. You can't do much more than that. You grab puts right at the top, right here when it reversed down. And then here, it's at the very top, it came back down. Right here, you grab puts right in this line. Oh, nope, that's it. So 1, 2. So you lost 1, unless you consider this a win. Or 1 minute, I would say this is a loss. But you win 1, you win 2, you win small 3, 4, and 5. So 5 out of 6. Are you drawing from the most recent high low frequent candle? What criteria do you use for taking profits? I would always take profits. Don't be greedy, because if you don't take profits, someone else will. That's always going to be my mindset. So it's usually 20%, 30%, 50%. But if you scalp it, this is where you would scalp 20, 30% quick profits. Now, if you were to play the longer time frame, like I'm just gonna delete all this drawing really quick. And I'm just playing from level to level. Like let's say I'm playing SPY, I'm taking 2 DTE out. I would buy my SPY call like today. I bought it at 675, close as I can at 675. I know this was there was a gap. Then this usually only good for the first 45 to 1 hour of the time. Because once it hit, you are pretty much done for the day. Where is that little gap? Right here. 680. Oh, right over here. If you're scalping, your profit should always be 10, 20, 30, 50%. But if you're playing on a bigger time frame, you take it all the way down. Oops, under 10, 5 minutes. So if you were to play puts on Monday, this was Monday. This is playing with confirmation under 1 minute. You see it go green. Same with volume. You do, if it's normal check, you can check it on volume. But this candlestick, but based on the RSI, you use this. But if you're playing, like let's say the market open, if you were to take puts, on the grand scheme of things, not scalping, you want to buy from level to level. You take puts from down here. You aim to yesterday low. You can look to your left. Always look to your left. That is where you would, yes, if it did 100% and you didn't take profits, at least scale out some. That would be insane. I know just puts here hit 300% yesterday. But if you were to hold continuously, this is where you would sell out all of your puts. You look to your left. Anything more than this is a bonus. You can sell out 95%, leave the last 5% for bonuses, but anything beyond this is like you're just being greedy. And then here was Monday. If you were to grab puts, was way below pre-market low. It took several times before it hit 675. Look to your left. If you know the whales are sitting in puts, they were trying to get to the last, resistance. What criteria use for taking profits? I know it's changed depending on the market structure. I mean, if you have that SPX 6870, like right here, even though with all the, pre-actions, obvious action that did, at the very end, it hit $2,400 from $500. That SPX 6870. I mean, can you hold it that long is the questions. I mean, if you're playing with money you do not need, you probably could hit that. But since most of us are playing with money that we do need, I think we have to take profits along the way. We can always buy back, scale in, and eventually it's gonna hit. Now, because I always look to, like I said, someone asked me about that trend line. You can always look for the parallel line or trend line. Always look to the top where it's where SPY rejected. Oops, wrong trend line. It's touch here, dies on a 1 hour time frame. It touch and die. It may wake up a little bit, but touch and die. It did wake up, a little bit more than 50 cents, but it's still gonna die. But if you can't, if you don't, you can just zoom out to the 5 minutes and draw it in. It doesn't have to be an exact, trend line. Before the market's open or whatever it does, just look for this and say, all right, whenever it touch close, you might miss that little gap. That's fine. Let's say if it's gonna touch here, meaning if it touch here, I'm just gonna grab puts close to it, 50 cents to $1. I'm gonna grab puts. Yep. So see how yesterday it touched at the top, it just died really hard. And then today I should have took puts too. It was still the same trend down, touch and die. And then for that second line, that's just the major 1 hour time frame. But let's say if it was underneath here, where do I grab my second set of puts? You see how it touched here yesterday? It keep rejecting that trend line. There might be some. This would be my. If you were to play, let's say you have 10,000 and every single play is $1,000. You're gonna grab puts here when it touch here. When it touch here, it may break out. You may lose one, but you're gonna win 1, 2, 3, and then 4 times it came back down. And look at it's gonna be acting as a support line. So if tomorrow market open and this is holding, if it's above here, it's gonna bounce back. It's gonna bounce up here. It's gonna go that way. as long as we stay above this line. If we lose this below this line, it's going to become a, as a resistance. So just look to your, go to your 5 minutes, look for trend line. You may miss the first actions. There's always going to be a second or third time to play. Like I said, second, third, first, second, and third time. The fourth time you are risking it. Say that's first, you missed the first action. No one can ever catch the first actions. That's just impossible. Unless you have some information, like I said, inside information, you can catch it. But I'm gonna miss. I'm gonna catch this. I'm gonna wait for that. Come back here. My second action, I will take puts here. I'm gonna hit this one. I'm gonna hit the third time. Like you're gonna miss the first movement. Everyone always miss the first movement. The second movement, you have to wait for that trend line to form. But I'm gonna hit my second and third time, and then I would be done after that. The fourth time, I am, that's gonna be a big risk if I was take puts right here. I mean, I would grab puts, but this is, first 2, 3, and fourth time is usually a no-go. Like in punish late, people chasing puts or chasing calls, same thing. You can only do this 2 or 3 times before, give up. I would grab, I'm going to look at AM. No, any stocks have the same concept. I thought just going to break out when I sent in triangle and break out above here, grab call. But AVGO killed the stocks too. Go to your 5. There you go. That would be a bigger, better pictures. So here's AMD, with AVGO did really bad earning, it drops really bad. You're probably not going to be able to catch this first movement or the second movement. Like this is just, AMD dropping really hard. But you will see, hey, it's bounced up from here. Because you draw yours in all the way, look to your left, always look to your left and see, drawing some, look for trend line. It does have a tight, so it's probably going to break out from here and break back up, because it's again dump, getting the same AVGO treatment. Yeah, it has to break above and stay above the trend line, specific trend line that if it stay above, like that SPY that we have. How that 5 minutes, whenever it touch, it dies, right? It touch and dies, but now that it's staying in between this line, because you look to your left, it always touch and then dies really hard down, but this has become a big resistance. Now for tomorrow, we need to break above this line right here. Probably 6, 7, 8, 6, 7, probably 6 by the time it's tomorrow open. 6, 7, 9. So if it's 6, 7, 9, you go long. So if tomorrow, I don't know anything about tomorrow. Okay, let's say the market's is here. One. I know this is my yesterday high, yesterday low. So this was, all right, the markets is going to be here. And then let's say this is my pre-market high, pre-market low. Meaning if the market break above this, then I will grab call. And up here, I will grab puts if it's short underneath. But you also have to look at the 1 hour time frame where it's keep rejecting too as well. So there's not a much of a wiggle room. It's getting really tight. There's, it has to break above this yellow line, like completely away from this to break out. Otherwise, it's just going to reject and die. So I know this is my red line. That's my rejection level. Like if I touch this, it's going to die. I may miss the first action in the morning. I'm okay with that. But if I see the second action, if they drop and touches and die again, I'm going to grab puts on the second, not the first one, but I'm going to grab puts on the second and third time if it touch here and die. Don't worry about the first movement. The first movement, it's all 50-50. You have no idea if it's going to break above or break below. But if you know that, hey, there's a right here, there's a first one, you're going to grab puts. You're going to let it just dictate. You're going to let the market dictate. If it drop down here, and you're going to miss it, that's fine. But if it's going to come back up here and then touch, you're going to grab puts. This one right here, you're going to grab puts somewhere along this line. So does that make sense for everyone? That's how I would play it. Using just the trend line, and then utilize your RSI, your the MAC. So never ignore that. Use everything to your knowledge. I'll share my and then I will share what I see on the option step. That's usually where the whales, what they do on a bigger time frame, where they put their money. I mean, they are not going to win all the time too, just like me and you. They're going to lose too, but those are usually the money makers. They rarely ever lose. So if tomorrow we reject here on this line on the 1 hour time frame, you know what to do on the second time frame. And then if it's reject, and then look to your view up as well. Yeah, I use the flow, but I usually chart first though. Chart first, flow second. Yep, I will. Nah, it's not vacation. It's work related. So I'm not. It's fine. I'm not having fun. I'm stuck in the. I can't go out, so it's okay. I'll get my head cut off if I go out. Kidnap, 1 or 2. All right. And one more quick strategy. Just know that the 50 drop underneath the 200 is called a dead cross. And you know what? I don't need to see this. And I don't need to see, I only need to see that. Okay. So that's my 50. That's my 50 and that's my 200s. So whenever the 50 cross underneath the 200, it is called, how you make the second major trend line that you had earlier. I'll show you. Yeah, so whenever the 50 cross underneath the 200 is called a dead cross. A dead cross is really bad on a bigger on a 1 minute. That's bad, but on a bigger time frame, that is extremely nasty. So on the 1 hour, spies is downtrending until the 200, until the 50 cross over the 200. You have a golden cross. Just know that 50 EMA on the 200 is called dead cross. Yeah, vice versa. And if it's 50 EMA over 200 EMA, is called golden cross. Now the entry point would be where it's keep rejecting. So look here 5. Look for trend line. See where this is right here. That's you see it's really rejecting. But the bigger time frame is just that little 50 EMA crossing underneath the 200. If it does cross tomorrow, if the data is bad, or if Thursday data is bad, remember, SPY is only one exception. It does not care. It can be both a bullish and a bearish day on the daily. AMD, SPY, not AMD, Palantir, Microsoft, Amazon, it will respect trend line. SPY is the only one that don't care about golden cross, dead cross. It can always change. Correct. Yep. If it's cross underneath, it's gonna be a really bearish. Like I can move to Hentron. You see how the 50 cross underneath the 200? That has been bearish since forever. You can go back to here too as well. Since November 25th, it never crossed over. So just when it's crossed underneath, if you were to go long, you would win. And then when it touched the 200 again, you just grab puts again. I think eventually you're gonna win more than you lose. But on the bigger time frame, AMD is getting bullish. It is going to break out eventually, but to scalp it on the shorter time frame, it is a puts. Like yesterday, grab puts. Same with see how this crossed way underneath and just die. See how this was one of the perfect. It's the cheapest and it's respected trend line. Like it's a perfect trend line die and touch and die. ARM is part of NVIDIA. NVIDIA has been getting shorted, so ARM is going to get shorted too as well. But they are just, look for sympathy stocks. See that 200 cross, 50 EMA cross underneath the 200 on a 1 hour time frame. Look to the 1 hour time frame and then look for trend line where it's keep dying, rejecting. There might be a little bit of bounce, but that's, but if you play in the longer time frame, you're going to win. It touch and die. But tomorrow, if it touch and die again, you know what to do. But here's already 1, already 2, already 3, and 4. The 5th time, same concept. Now, Microsoft, it does have that. Now, Microsoft is only a different animal. It just started having the dead cross on the 1. Well, let's remove all you drawn. It does have that on the dead cross on this. It's going for that session gap right here. It just filled today. But on the bigger time frame, on the daily, that 50. But if you look at the 20 EMA, it's sitting on the 20 EMA. It filled just gap right here. It came up. It went back down to fill right here. So I don't think it's gonna drop anymore. If you were to bet on Google, it's gonna it's gonna bounce. Once it fills, it's gonna bounce back up. But worst case is you can short Google It doesn't hurt, it needs a catalyst, it needs news, it needs good CPI data. Yep, there you go. I mean, it did gap up above, but it didn't gap that much. I mean, if you were to play just and hold and say, all right, I'm just gonna keep on grabbing puts, you're gonna win on Google. It's been down 4 days in a row. It filled at 305 or 300, 303. Horizontal line. Okay, so I mean, the best bet is I'm gonna still, if you have to grab puts again, those cases you might lose one more. It's gonna drop a little bit to down here when it opened from 300 to 30, but it can drop, always can drop further down. It needs good news, need catalyst to go back up. So if tomorrow the market is bearish, I don't think there's no CPI tomorrow, so the market is just gonna do a lot of, trend line, just full rejections, just gonna touch and die. There you go. Anyone got any other questions besides Google? Yeah, silver's going berserk. That's all the hedge funds are buying, just up. Metal, gold, coppers. We gap down, fill. It just keep bouncing off this level right here. You see this little. Do you see how it's on a 1 hour time frame? See how it's keep bouncing up a particular level? As long as above, not the 20, but the 50. You look for trend line up the 50. Just keep buying it, and it's eventually it may give up and die down, but sometimes it's gonna consolidate and then they keep bouncing up. Yeah, palladium. Oh man, I think that's a duck. If you had to ask Chris, he loved palladium. There's only one is Cadillac converter. Palladium, I can't pronounce that word, but yeah, it's Cadillac converters. There's only one thing that use that. That's silver for you. Sometimes the stock does not have any trend. You have to look at the parallel line, look at where there's a lot of FVG, meaning a lot of supports are being held. Everything has right now, the market on the 1 hours, everything has a dead cross. Ooh, Amazon looks nasty. And this is only the second day. Okay, I know what to do with Amazon tomorrow. I think Amazon get more meat for the downtrend to 214, or at least 216. So this is what I do on at nighttime. Just go look for trend line, look for support, look where it bounced down. I do Q. Q is only when it's Nvidia has good earnings or your semiconductor has really good earnings or bad earnings, one of the two, then you play Q. Q is only good with semi stocks. Yes, that's the trapezoid. That's like a big support line. Meaning there's a lot of support here. It's bounced up 1, 2, 3, 4, and there's 5. I mean, that's going to be a big, but there's more meat for Amazon drop. And you missed the first action, but you're not, you missed the first two, but you're probably gonna get the third action right here on Amazon. So if Amazon tomorrow, we know it's, if it drop and if it touched 222, just take puts on Amazon puts. You take 2 to 3 strike, whatever you can. My sweet spot is between 150 to 200 to 300 bucks. The most I would spend on a contract is 300. But if it's intra-week, I like to be cheap as possible. Between 150 150 to 200 is my sweet spot. Yeah, Tesla's, it dropped. Yeah, I hate to I want to short it, but it's also a lot of people's money's in it. So it's like momentum might just keep on going and just steal everyone money too. But you want to wait, not again with the money. The money's there, the flow is there. That's kind of like betting against. Once it drops, it's going to drop hard though. So timing just has to come down perfect. You wouldn't have to sit on it. Sometimes I go hit 500 and reject really hard and then die. But with Amazon, there's no news, there's no catalyst for it to go up. So here's 1, 2. You missed that. The third time, we're gonna get a lot of room. 220 to 216. So probably take 1 week puts out. Maybe if you are a high risk taker, take an intra-week puts. Take 2 strike. Take the sweet spot that you can afford. That's what I would do. I don't know about Google. Google already dropped down 1, 2, 3, 4. It may get one more time, but that's like number 5. It's like touching, fool me once, fool me twice. Eventually, it's not gonna work out. Same thing, but just. That's Amazon looks good for a dump. This one is only the first, second, but probably consolidating. There's a lot of candles sticking up around here, so Apple doesn't. I don't think it's easy to not short. Just no, unless it loses 270. There's an inverse head and shoulder right here. There's a head, and there's the left shoulder. There's a right shoulder. If this break below the neckline right here, you can short. But if it bounces above, it's a call. So it's going to be you might have to give at least above 270. I would grab puts. Underneath 270, you would have the right shoulder forming on Apple. Let's see Tesla. How do I want to do with Tesla? Tesla double top, 490. So it can either break out tomorrow and go all-time high, or it can die. But once it dies, it's going to go for that gap right here. Yep, double top. Okay, Amazon, if you were to add back, you only trade what you're willing to lose. Correct. Yep. Options, whatever you put in, you lose to that much. You don't lose more than that unless you do a margin call. I would never recommend you do a margin call, and I'm not going to show you how to do it. That is when you borrow money against the house, and if you lose, you have to file bankruptcy. But Amazon, you see that Amazon has that 216. There is a lot of right here at 216. So you have until 222 to 216. It's right here that's been holding up, but if it does drop, it's 1, 2 big level. There's a little gap right here. It's been formed, but that 200 is a big one of them. Not the biggest, but the 190. If you can get that at 190, if it goes to the 190, you buy the whole house. And 1, 2, 3, 4, 5. There's a lot. 1, 2, 3, 4, 5, 6. It's right here. Bounce up. Yeah, 190 is where you want to go sweet spot. Joby and ACHRs is a better one, I think. Joby sounds good, but ACHR has more buyers on. Yeah, it has been stuck around here. But ACHRs, you actually got Kathy Woods in this one. And actually, they have a products, which is one too as well. They actually have a license to make flying vehicle. Yep, Amazon. That's where I would aim to buy my Amazon long term. Like we come back. If it doesn't, if it bounce up from just from 215, yeah, then we can keep go up. But if it needs a bad CPI to go back here. But be careful. I know that's Bitcoin, US dollars. We bounced up perfectly off this 87. This is also where all the black rocks are buying this up. 75 would be nice though. 75 would be super ideal. Yeah. You just look for the big trend line where it's keep getting bounced off from. You look, see, just go to your daily or your 4 hour time frame. Just zoom out. Well, just see where does it kind of bounce off from. Oops, I don't need that line. I need this line. Yeah, this might be a little room where it went underneath, but look at the bigger time frame. It's always bounced off from there. So if Bitcoin touch 82 again, that's going to be a double bottom, and it should bounce back up and go back high, much higher. That is your daily breakout for Bitcoin. Yeah, but that's just a small. But once it break double bottom, it should break out. All right. Anyone got any other questions? No problem. Hopefully this helps. It's a little bit strategy. Use a little bit strategy for me. Use yourself. Adapt. Just you don't have to listen to me. Find what's work for you and make money on your own. Use a little bit of everything. Just adapt. I know Mama used a different strategy. She only watched the 5 minutes, but I think there's spies on the bigger time frame. Where's my spy on the bigger time frame? I have this. So we lost this bigger time frame. And now we are making a second set. Just know that if SPY ever lose 652, you sell everything. Yep. Yeah, if SPY ever lose 652, you sell your entire house. This is where you go short the market really bad. If this is called a VWAP, underneath this is really bad. We don't want to lose 652. 670, as long as we okay at 670, I'm fine with going long term on SPY call. You know when a stock is potentially going to break out. Those a momentum breakout, that's easy. I mean, you look for daily candle. No problem. That's I think I look at HD the day that I was playing HD, right? You want to see the market gap up? Like I think I took play on HD when it break out. So okay, not HD, but was it LLY on Friday? Okay, so these for potential breakout when after just look at the market when it opened. Just look, at 3 a.m., 4 a.m. when you wake up. Look for a few stocks that when it does gap up, or you can go to your Webull or anything. Look for like the highest potential breakout, highest volume. So just imagine just is a gap up and it doesn't come back down. Like just in LLY on Friday, it gapped up. This was Monday, I think it was right here. This was Friday. It gap up, even though it's gap up a little, but gap up and never came back down. All the stock gap up and came back down to fill, meaning it's a weak stock. So by the time the market opened, meaning thousands of people like me and you already looking at this, staring at this stocks, not just meaning it gap up and never came down, meaning it's a strong stock for that day. Volumes are there, meaning thousands, more than thousands of people already looking at LLY. Even though it came back down at market close, those thousand eyes are already on it. They're gonna risk the play, and if it pops and stay above VWAP, you are good. And same thing on Monday. It gap up and never came back down. I know this then it did a little wick, so that was not a good wick that we want. We don't want to see that. You want to see a clean break and it doesn't come back down to fill the gap. So that is where you will say potential take the breakout, the intraday breakout. JBGO is today. Where is that the one? It was a really nasty wake up, but it's a very little wake up, but it did not come back down to fill that little gap. Like it never came back down. I mean, by that, by the time the morning open, people are already staring at just, you don't worry about the last 20 minutes. You already got the thousand of people already staring at just looking to play AVGO. But you see how it has a double bottom right here. One wick, second wick, double bottom. It's how it's formed. SPY does double bottom. Always think of this like a double. If it's the opposite, if a double top, it does not like to. It will break down. Like 1, 2 is going to break down. But if it's double bottom, like to break above. Workout today. Yep. 8. I took that one. Yeah. So BA had an inside day. So it has. So yesterday it break out. It went from an inside close to that 1, 2, 3, 4 candle, 3-day candle, green. So right here on the daily, if you see a lot of that doesn't mean right here is green, but here's the one. Where is that? 3 minutes. You have to go 1 minute. Okay. I think this was one which is bought by hedge funds. So we got the news, we got money from the hedge funds, not I think there's no chart for just one. It's just money's here. Yeah, Bowen. Yeah, Bowen is more of a. It's really hard to play with just one. But it did break at 196. It did form a cup. Here's the neckline. Here's your cup right here, and it came back down to fill that neckline. That's just only one I took it, but yeah. But otherwise, no, it wasn't any technical breakout for Bowen. It was just buying. I'm just betting on it. It's gonna break out, and This one was just being bought up by hedge funds, not retail. So that's one way to play Bowen. Or if you have, you know that, hey, the hedge funds or big guys are buying. You have a mini cup right here. There's a mini cup and there's the handle. It came back down to fill the bottom. Bigger time frame. The neckline. You got one neckline. Here's the cup. You got the handle right here. And break out. It's gonna break out. One up that breakout 208. If you could buy long, it's gonna break out. Probably 220 above this right here 213. Because it's trying to break out all to form all-time high again. So Bowen, there's no technical. I mean, it's just not for intraday. It was just luck. We just got lucky on that. Yes, on today play. But if you buy Bowen long term, you have to buy deep in the money. Anything out the money, you just get killed. So that's my Bowen, strategy. There was no. It does have an inside bar similar. It's a very close to an inside bar. 3-day move. If you ever see, I can show you where is it. If you ever see one, it does not form that Michi. Nope. Nope. Okay. If you ever see a big green candle followed by a small red candle, just go long. And vice versa. If you ever see a big green, big green similar to a size to a big red, if it's identical to each other, you know it's going to be a bad bearish news. You need a big green followed by a small red, then you go long. I want to see an inside day bar. I can't find one. They don't have one. That's kind of sucks. They gotta have one. Inside bar is, you have a big candle and then you have a tiny little candle right in the small, like right here. The 3rd day usually it's gonna break out, but I can't find one. Yes, Bowen is all over the place. It's small cap is easier to find. Right here. That's your mini. You see how it break above? This is big candle followed by a small candle, even though it's so meaning if you were to play the breakout, you break the breakout above 16. See the 3rd day, you take it breakout. That is a mini. That's a 3rd day play. Yeah, small cap has a lot of that. That's it. Okay. Anyone have any other questions? I'm gonna let you guys have dinners. Enjoy your day. Hopefully you learned something. All right. Good night. Bye, guys.